Welcome back to the deep dive. Today, we are opening the vault on Algorand, ALGO. This isn't just, another layer 1 blockchain. It's got quite the pedigree. Founded back in 2017 by Silvio Micali, an MIT professor, the main network actually went live in June 2019.
Yeah, that academic background is really key here. And for this deep dive, we're trying to bring together sort of three main threads from the sources. We'll look at the unique tech, that pure proof of stake thing, then the big shift they made in their economic model, and finally their roadmap for 2025 and beyond, which is really all about real-world use and getting mainstream adoption.
Right. And before we even get into the weeds of the tech, we should probably set the scene a bit, because there's some significant context. The sources make it clear ALGO, the cryptocurrency itself, is facing some regulatory uncertainty. The SEC has actually filed lawsuits claiming it's a security under U.S. law. So that's definitely hanging over things.
It is. And the financial picture is also pretty interesting, especially the Algorand Foundation. Transparency reports show they hold a huge amount of ALGO, something like 1.6 billion ALGO, not million, billion.
Yeah.
And that massive holding sparks a lot of community talk naturally, because the foundation uses structured selling of those tokens to fund development. We're talking PDP upgrades, quantum resistance, marketing, all of it.
Yeah, that structured selling, it's controversial for some, but it's literally funding Algorand's future development right now. So what are they actually building with that money? Well, it seems like technical leadership is a big part of it. Let's maybe unpack the core tech first. Algorand's claim to fame, instant finality.
Okay, yeah, let's dive in.
Yeah.
So Algorand uses pure proof of stake, PPoS, which, yes, is very energy efficient. That's one point. But the pure part, why they call it that, it really comes down to how consensus works. It's built to ensure that once a transaction is in, it's in. Instantly, irreversibly.
Instant finality. Okay, for listeners maybe not deep in the blockchain jargon, what does that actually mean in practice? Zero delay.
Yeah, exactly. 0 seconds delay. Once confirmed, it's final on the ledger. Immediately. Permanently. And the reason that's possible is the protocol is actually designed not to fork. You know, the CAP theorem in distributed systems? The trade-off between consistency, availability, partition tolerance. Algorand makes a very clear choice. It prioritizes consistency over availability. If the network has trouble reaching consensus, it pauses and recovers quickly, rather than letting the chain split into different versions.
Okay, preventing forks is huge for certainty. But how does it actually choose which block is the right one? And how do they stop attackers from messing with that process?
Right, this is where the clever stuff happens. It uses something called cryptographic sortition. It's a really fast, non-interactive process. Essentially, for every step of reaching consensus, Algorand uses verifiable random functions, VRFs, to randomly pick a small group, a committee of users. And your chance of being picked is weighted by how much ALGO you've staked.
So it's not just fast. The key is that the selection itself is sort of hidden, untargetable.
Exactly. It's private. An attacker literally doesn't know who to try and attack until after that committee member has already sent their message. And once they've spoken, boom, they're instantly replaced by another randomly chosen participant. Think of it like a secret jury that pops up, gives a verdict, and vanishes immediately. That's the core defense.
Okay, a vanishing jury. I like that analogy. And this quick process powers a 3-step system to actually build and confirm a block. Why 3 steps?
3 steps for precision and security. First, you have a committee proposing potential blocks, the Block Proposal Committee. Second, a different committee, the Soft Vote Committee, votes. This step is crucial because it mathematically ensures only one proposal is chosen, based on its hash. It prevents fights over which block to build on. And finally, a third committee, the Certified Vote Committee, double checks that single chosen block for any funny business, any fraud, and then bam, it's certified and committed instantly to the ledger.
Wow, okay, that sounds incredibly efficient. Secure, consistent, fast. What kind of performance does this actually translate to?
Well, the numbers are pretty impressive. Algorand currently handles over 10,000 transactions per second. And maybe even more remarkably, it's been running for over 6 years now without a single second of downtime. That stability is huge. The long-term goal, theoretically, is to push TPS up towards 50,000. 50,000. That starts getting into the territory of major global payment systems. And just for context, in one benchmark comparison looking at max TPS over 100 blocks, Algorand hit 5,716 TXS. That was actually a bit higher than Solana's benchmark result of 5,289 TXS in that same test.
Interesting comparison point. So that solid technical base kind of leads us into the economics, right? Algorand made a big switch recently, moving away from governance rewards to focusing on continuous staking rewards. What did the old system look like?
Yeah, the old system, which started back in December 2021, was centered around governance. You had to commit your algo for 3-month periods, and you had to actively vote on proposals each quarter to get rewards. It definitely encouraged community involvement in decisions, but it wasn't directly incentivizing, the minute-by-minute security of the network itself.
And the new system, starting in 2025, seems laser-focused on exactly that network health and security.
That's precisely the shift. It's about encouraging continuous participation through staking rewards. But what's really fascinating, I think, is how user-friendly they've made it, especially compared to some chains where staking means locking up your funds or risking penalties. With Algorand staking, there are no lockup periods. You always have access to your ALGO, and there's no slashing. If your node isn't performing well, you just temporarily stop earning rewards. Your actual tokens are never at risk.
Wow, no lockups, no slashing. That must lower the barrier to entry quite a bit. Did that actually move the needle on decentralization?
Oh, absolutely. Dramatically. The data we looked at shows us a huge success on that front. The Algorand Foundation's own share of the total stake dropped significantly from around 63% down to 21% after the new staking program kicked in. That's a major shift of influence out to the broader community. And they're also upgrading the network infrastructure itself, moving to a peer-to-peer gossip network. That gets rid of the reliance on centralized relay nodes, which further boosts decentralization.
Okay, so the tech is strong, the new economic model seems to be working for decentralization. Now, let's look ahead. The 2025 Plus roadmap seems all about taking this technical excellence and actually getting it used by everyday people and businesses, bridging that gap.
Yeah, the roadmap has these 4 strategic pillars, they call them. But pillar 2 is really telling, mainstream adoption. And internally, the phrase they seem to use is killing complexity. They know the tech is solid. Now the challenge is making it so easy to use that people don't even realize they're using blockchain, making it invisible.
That's the dream, isn't it? For pretty much any blockchain aiming for mass adoption. So how are they planning to kill complexity for the key groups? Developers, businesses, regular users?
Okay, let's break it down. For developers who are absolutely crucial, this is where some of that foundation funding comes in. They're bankrolling ALGO Kit 4.0, which is expected in the first half of 2026. This focuses heavily on developer experience. Think native support for common languages like Python and TypeScript. And interestingly, they're making sure major AI models, the LLMs, are trained on Algorand data so they can act as coding assistants for Algorand development. That's a very modern, very AI-driven approach to making things easier.
Making the tools familiar and adding AI help. Smart. What about businesses? Often the whole crypto key management thing is a huge hurdle for them.
It's exactly. For businesses, they're launching Intermezzo in Q3 2025. Now, the tech description sounds a bit complex, built on HashiCorp Vault, REST APIs, but its purpose is simple. It's basically a custodial solution. It handles all the tricky blockchain integration and key management behind the scenes, so businesses can interact using standard APIs they already know without needing to become crypto experts. It's like a Web 2.5 bridge.
Okay, abstracting away the crypto complexity for businesses. And then finally, for just the average person who wants to use something digital without learning about seed phrases, the end user.
That's where the Rocca Wallet comes in, planned for a preview in Q4 2025. This is a self-custody wallet, but it's explicitly designed to feel like Web 2.
Yeah.
No seed phrases. Instead, it uses things like passkey logins, like used on many websites now, and decentralized identifiers, DIDs, on the back end. It's a clear attempt to create a crypto experience that feels familiar and doesn't overwhelm users.
That focus on user experience seems critical. Is it actually leading to real-world uses? Are people building things people are, using?
It seems so, yeah. We're seeing some concrete examples. In finance, there's that Italian project, Fiduzioni Digitali, using Algorand to cut down fraud in bank and insurance guarantees. And the first tokenized money market fund actually launched on Algorand just back in June 2024. For identity, the Rocca Wallet is going to power the World Chess Universal Chess Passport. The goal there is to fight cheating in online chess.
Interesting niche. And you mentioned global impact too, something called ALGO.
Yes, in India. ALGO is exploring using the blockchain for a digital ID system to help women access public health services more easily. And beyond these sort of flagship projects, the community chatter points to a pretty active ecosystem. You hear about DeFi platforms like Folks Finance and Tinyman, the real-world asset platform Lofty, non-fungible domain names, NFTs, and even gaming and community tokens like Chips Algo Casino and Akita Inu, which is apparently building its own staking platform and social network. So things are definitely happening.
Okay, so there's definitely activity and ecosystem building, which I think sets us up nicely for the final piece. Putting Algorand in perspective, how does it stack up against, say, a major competitor like Solana? The comparison data we synthesize shows a really clear split, doesn't it?
It really does. This is where it gets super interesting because technically, Algorand seems to have some real advantages on paper. Finality time. Algorand is basically instant, 0 seconds. Solana's around 12.8 seconds. That's a big difference for things needing immediate confirmation. And while the peak TPS benchmark numbers were close, remember, Algorand achieved its number alongside that 6-year record of zero downtime. That stability is a key differentiator.
Right. And on decentralization, Algorand uses pure proof of stake and has significantly more validators, over 1,800 compared to Solana's roughly 870. The sources even suggested Algorand's on-chain governance is maybe arguably better than Solana's off-chain approach.
Correct. So if you look at technical design, security principles like instant finality, and decentralization metrics, Algorand seems to have built a, well, arguably superior foundation. But, and this is the big but, if the foundation is so strong, why is there such a noticeable gap in current real-world activity and developer numbers?
Yeah, that's the contrast. The market momentum picture is different right now. Solana's real-time TPS is way higher, almost 99% higher in the data we saw. Total transaction volume is also massively higher on Solana, over 96% more. But maybe the starkest number is developers. Solana has something like 10,700 developers listed, while Algorand has around 537. That's a huge difference in ecosystem builders.
It is. So what does this tell you, the listener? It suggests Algorand might have the superior technical edge of the security, the design purity, the performance potential, but it's currently lagging way behind in attracting the developers and the day-to-day economic buzz needed to really break through into the mainstream.
That really is the core tension, isn't it? A blockchain built with incredible technical rigor, focused on that instant finality and security, which is now using its considerable financial reserves from those ALGO holdings to push really hard on its roadmap. Rocca, Intermezzo, AlgoKit, all aimed at killing complexity and attracting the Web2 crowd it currently lacks.
It's a classic battle. In the way, technical perfection versus market momentum. And it brings us right back to the Algorand Foundation and that huge 1.6 billion ALGO stash. Given they're funding all these ambitious long-term projects, quantum resistance, network upgrades, the whole 2025 plus plan by selling those tokens, how long can that model sustain itself? How long until Algorand needs to be truly self-sufficient, especially if they really aim to have 100% of the supply circulating by 2030? That, I think, is the big question hanging over Algorand's future right now.